Welcome to the Guelph Real Estate Report podcast with your host and Guelph Realtor, Ryan Waller. This podcast is designed to provide information for those buying and selling homes in the Guelph area to make the process more informative, fun, and a little less stressful. Now, on with the show.
Hey everyone, welcome back to the Guelph Real Estate Report podcast. This is episode number 29, and I think I'm going to start season 2 here. My name is Ryan Waller, and I work in Guelph Real Estate with my wife, Beth. Today, we are going to talk about December real estate numbers. And disclaimer, it's not the most exciting stuff. December is a month where we know it's going to be the slowest month of the year. As of December 15th, most of the activity dies off. It's the most canceled listings month of the year. We anticipated that the overall number of listings would go from about 450 down to about 400 by the end of the year. But to give you an idea of what we're going to talk about today, the overall listings went from 450 to about 350, a significant number of cancellations. And this is part of the reason why we look at this information, because it does give clues into what we can expect for the future. And this year, I got the impression that we ended the year early, sellers gave up earlier, buyers stopped looking earlier, and I'm wondering, which I don't have the information to back it up, but I'm wondering if there's a correlation between snowfall and people calling it quits for the remainder of the real estate season, because winter this year took effect, I think, in November, and snow started falling. And I think that maybe once that happens, people just call it quits. I don't know. I'm just speculating. The bigger concern we have with all of these canceled listings is, what are the people going to do next? What are those sellers going to do? Are they going to come back in the spring, which I anticipate the majority are going to do? And the concern, and, I may be wrong, but there's always a group of people that are going to list in the spring. That's always been their plan. And if those people in the spring come out, as well as all the people that canceled, there were a lot of them that canceled in December. If they all also come back in the spring, are we going to have a glut of supply? Now, who knows? This is purely my speculation. But my concern is that we're going to be sitting on a lot of supply in the spring. We've been telling sellers, if you're ready to go, get out earlier than the spring. Get out at the end of February. Get out early March. But get out on the market before the rushes come. So of the 71 sales we had, 46 were in the detached home segment and 25 were in the condo segment. And to start with the detached segment, the low here was $500,000 in the ward, and the high was $1,575,000 on McAllister in Courtright East. The overall average for the month was $828,000, which is the first move in about 6 to 8 weeks over $800,000. And we were at $900,000 earlier in the year, so we've taken a bit of a drop there. It may be seasonal. December is also a month where it is a small sample size. So you want to be sure that, when you're looking at these numbers, you're not basing everything you're doing on December. So as I mentioned, not a huge sales month. Overall, in December, we had a total of 71 sales, which for some perspective, most months of the year are over 100. So we are at 71. Significantly lower than what we're used to seeing. And as I mentioned, that is something that we've expected. December, sure, it's going to be light, no doubt about it. But 71 is pretty low. And that puts us at about 2.3 sales per day, which for a December is really light. It's one of the weaker Decembers we've seen in a little while. December 2023 was slightly lower, but man, I remember December 2023 where you couldn't get anybody to do anything. Nobody wanted to sell, nobody wanted to buy. Everybody had called it quits early that year. And it felt a bit like that this year as well. As we got into mid-December, most people had already decided whether they were going to cancel or keep going. And we just continue to see cancellations into the end of the year. And on top of that, many listings, when they write a contract, have the expiry of the contract to be December 31st. So naturally, there was going to be a dip on December 31st, which we saw. 6 homes in the detached segment sold over the asking price. 1 sold at the asking price, and the remaining 39, or 85%, sold under the asking price. Now, it's worth noting that of the 6 that sold over the asking, 4 of them were at $725,000 or less. And usually when things are selling over asking, it's not because there's demand. It's because the home was intentionally priced low in order to drive multiple offers to probably get a quick sale. This is a different type of strategy that works really well in a low supply market, works very poorly generally in the type of market we're in. And it's just worth noting that it's not demand that brought the over asking. It is a strategy used by the seller and realtor. We typically look at the number of homes that sold over $1 million as a gauge to what is happening in the market, in the Guelph market, because during COVID and the last 5 years, it tended to be between 15 to 20% of sales were in that range. And we saw that in October it was 17, November was 7, and December rolled in at 13. So 7 and 13, I mean, we're starting to trend below what we would say is the average. We're going to keep an eye on that for this month and see what happens in January. But it might be worth noting that, homes that were selling in around $1 million are now selling less. And the overall market is coming down slightly. Of the condos that sold, there were 25, of which the low was $390,000 on Kingsbury Square. That's a low-rise condo. $875 was the high. That was a semi-detached sort of row house in the 55-plus Village by the Arboretum community. The overall average here was $522,000, and I'm going to continue to talk about this, and you're probably tired of me talking about it, but this segment is struggling. And the overall average, $522,000. This number was close to $600,000 by mid-year, and it has been slowly going down and down and down. And from my perspective, it will continue to go down. Maybe not big amounts, but it will continue to go down until there is demand, buyer demand, for the supply that exists. And not only do we have low demand, but we also have new projects or new supply coming to the market. So until this sort of matches up, we are going to be sitting in a buyer's market, and prices will continue to decrease. Now 3 of the units here sold over the asking. Like the detached segment, this is not due to buyer demand. It's more so that it was a strategy to get multiple offers in to get a sale. Part of the challenge in this segment is that now I did a video, a YouTube video about this last month, that 44% of the condo market was vacant. It's now 45% of the listings are vacant. And we're starting to get situations where some sellers are pricing low just to get demand in there and get a done deal. And I think we saw a bit of that happening in December. 2 sold at the asking price, and 20 of them are 80% sold under the asking price. The segment here, a condo segment, townhouse, stacked townhouse, we're in a buyer's market, and you need to be priced appropriately. Those who want to cling to prices from 2022, 2023, even 2024, in some cases, are going to be sitting. And Beth and I have data that we're going to make a video about next week that clearly shows from 2025, those who tried to price it higher than the market to quote unquote see what happens, saw what happened, and their house just sat longer. And those that priced it appropriately at market value out of the get-go sold quicker, and in many cases got a better result as a percentage than those who started off at a higher number. So it is so important that you price appropriately for today's market and accept the market reality, which has been a bit of a challenge. And I think why so many of those 45% of vacant properties are vacant. and for sale because the seller has given up on the tenant or has moved out, but will not accept the current market pricing. And they're gambling on the fact that the costs for them to hold it every month are going to be less than what they can sell it for in the future, which I'm not convinced is actually a good move. The other risk in this segment is that a lot of these condos that were built to satisfy investors or satisfy the need for housing for students. And now that the university has clamped down on foreign students, there's less enrollment and less need for that housing. And yes, there certainly still is demand for housing, for student housing, but not to the craziness it was 2 or 3 years ago. So add that on top of some of the other challenges we have right now with investors and oversupply, and I believe we are going to be in a situation where prices will continue to slowly decline in the condo segment. We're selling 0.8 units per day, so less than one per day in the condo market. And this number was over one. In fact, at some point this year, it was double. It was 1.6 per day. So, we have, I don't even know what it is, 8 months supply of condos at this point. If one sold every single day at the going rate, it's a lot of supply. So watch that. If you're buying in this segment, it's a great time. Will it get better? Probably. I probably think it will. But who knows? Who knows what can happen tomorrow? As mentioned, Beth and I are going to put out a video that summarizes some key things we found in 2025. But to give you an idea of where we're landing on the year, we're about minus 8% on sales volume. So if you added up all the dollars of the sale home prices together, it's down about 8%. Units sold is down about 6.5%. It's about 120 units less than this year. And the overall average price only declined about 1%. And it did hold. So an interesting fact there where, we did see the sales volume and the units sold down, but the price managed to hold. So we'll keep an eye on that. For next year, we're anticipating that the price will continue to decline, but that the overall number of units will go up. So we're saying more houses will sell, but at lower prices. One of the things that Beth and I have done that I think is really helpful to our client base is providing insights in the market, education for the market without an expectation. We don't sell people hard on anything. We aren't part of any sales programs. We provide information to people. And one of the things we're going to look at for 2026 is how can we provide better information that you won't find elsewhere. We've been doing it already, but we want to make it even better. So mid-January, we're going to come out with a summary of some of the things that we found in 2025 and some things that you will not see elsewhere. You will not get them from any other report from any other realtor or brokerage in the city. And for us, that's an important thing. So if you like what you hear, subscribe to our YouTube channel where we do a lot of our videos. Bookmark our webpage, bethandryan.ca, where you can find this update in writing. And tune into this episode. We update it twice per month at the middle and the end, and periodically a couple more episodes here and there. Anyways, thanks for listening. Talk to you soon.